was 232. The US is the largest consumer of uranium, the largest provider of nuclear power in the world. And the thought was 232 is something that they were able to file a petition with the Department of Commerce, hoping that they would make recommendations to the president that on the grounds of national security, he would instill quotas or quotas is what they asked for. Their view was the Russians, the Kazakhs, and the Uzbeks, former Soviet states, and Russia controlled a reasonable amount of uranium coming into the U.S. And we know how the Russians have and do use energy as a geopolitical weapon. And so their view was, please import quotas. We want 25% of all uranium bought from nuclear power plants in the U.S. to come from U.S. miners to save the industry. As an American, do I want to be dependent on them? No. Can I see the argument? Yes. But what we've long maintained is it doesn't matter, because if the miners would have held back and not filed a petition and looked at the big macro story, we think there's a deficit, and we think that's only growing. And the price they need to go into production to incentivize new production as their contracts expire, the waterfall accelerates, they would have gotten their price. So the market focused exclusively over the last 18 months on 232. Now, I learned a long time ago, I've been doing this a quarter of a century in investing, and I took my lumps along the way, but you learn lessons. And I learned early on that A, you don't want to rely on the government for something, and B, when the government says I'm here to help, you're like, oh my God. And also, as you can see, the growing groundswell of, well, it's a no-brainer. And you saw that in the US stocks being bid up. And when you see something that's so certain, it starts to already get priced in. If it were for 232, the fact that we think there's a deficit in the market would have come to the fore, because miners can't sell uranium at 25 or 35. A few can, right? 100 million pounds a year, roughly 100, 110, 105, that can be sold. That doesn't solve your 200 million plus pounds of demand and growing 1.5% a year. So, and secondary supply can't fill that gap. So price discovery occurs when two people are sitting on either side of the table negotiating a price, and at a much higher price. And that was on pause for 18 months.
So the working group has been put together. To me, having read the presidential memo, quite vague, quite unclear. To other people, it's they seem to be able to read a lot into it, which my hat off to them. But it seems to be focused around nuclear fuel protection, which covers a lot of things, because as you say, the nuclear cycle, it does involve uranium, it involves a lot of other things. It also involves utilities who have other vested interests, which may be gas, it may be coal, maybe renewables, well, wind, solar, etc. So there's a lot of moving parts. In 90 days, what's going to happen?
So what happens? Nothing happens. They do nothing. Okay, well, it is where it is, and gets back to business. No price increases, price discovery occurs, and if our work is right and we think there's a deficit, there we go.
Right. Okay.
If there is some relief, because they're looking at supposedly looking at the whole front end of the fuel cycle, and if they're looking at the front end of the fuel cycle, what you will see is that there is conversion and enrichment, and they need to understand that the U.S. doesn't own its own enrichment to commercially enrich. Is that a surefire cure right away for uranium miners that have? Not really, but it's probably, my guess is, there's probably this has raised awareness as to the importance of nuclear power and how can we help the nuclear power plants. And if you help the nuclear power plants, you're probably by extension going to help the global uranium industry, because you see less reactors closing.
I want to talk about some investment hacks, we'll call them, okay, which is, what do you look for generally when you're investing? What should you be looking for?
I realized throughout the years that the math usually doesn't lie. The math is not more complicated than fourth grade math, and maybe a drop of algebra, you plug a number in here or there, but the math is the math. Yeah. And what tends to happen is people are headline driven and price action driven. And I just don't care about short-term price action. And short-term doesn't mean today. It means For us, for me, for Sachem Cove, it's about risk reward. What's my potential upside versus my potential downside? And to do that, you can't calculate that unless you look at it on a company by company basis. And in this case, the macro uranium. And you
Right.
have to understand primary supply, secondary supply, inventory levels,
Yeah.
unfulfilled contract needs. If you don't have that, I can understand why it's easy to be scared,
Yeah.
because you read headlines. And I always say this, and I hate even hearing myself say it because I sound repetitive, but recency bias is an enormous driver of people's actions when it comes to investing. The most, and it's also when it comes to sell side analysts, institutional sell side analysts that are writing research. There's comfort in crowds, and when the market is down, people attach themselves to the most recent environment, because if you go outside of that, now you're alone, you're on an island, and a lot of people aren't comfortable. So I'm a bullshit guy. I look for bullshit. I look for
Okay.
I look for blowhard management teams,
Right.
and I look for bullshit management teams. And we do our work. We do our analysis on the macro. We do our analysis on the company, and then we speak to companies. We speak to them, and we're good note takers. And then we speak to them again, and we ask them the same questions. And if you're a management team and you were on the other side of a call with us, you think, didn't these guys hear me last time? And then we talk to you again, and we're going to ask you the same question. We want to see if you remembered how you answered it. And that's important to us. From a project standpoint, we talk to consultants, we talk to engineers, we talk to geologists. We're none of the above. So it's art, right? There's a bullshit detector. The mining industry, I have on my computer desk. I'm not in that room right now, but I have on my desk, a mine is a hole in the ground with a liar standing next to it, Mark Twain, right? And I always remember that. And they're in the business of raising capital to explore, develop, and do whatever. Are all of them full of shit? Absolutely not. Are many? Probably. So you have to determine that. I don't say who I think it is, and that's not my place to say that. So, do companies go out and acquire during a bear market? What do they need to do to survive? There's no revenue. What do? They need to raise capital. So what do? They need to make those glossy presentations, make us look as good as they can. So what do? They lower the costs a little bit, talk about the pounds that they have. And then what else do? They go acquire companies by issuing stock, and they play the pound in the ground game, right? Look how many pounds we have, and the enterprise value divided by pound makes us look cheap. And they diluted shareholders. Now, it doesn't always mean, we can't take a broad brush. Every company's different. You have to know what you're looking for. So, yeah, management's important, very much so, especially in the mining space. Geography, yes. Now, some people have rules of thumb for how they think geographically. We think geographically. Obviously, the jurisdiction has to be good. It has to be a very good mining jurisdiction. The rule of law apply, but what role does uranium mining play to the economics of that government is also an important question to ask. What's the history been? How long have they been mining there? Has there been any interruptions? What's been that challenge? And it requires questions and reading. And then you need to think about, where does the cycle play out, right? So for the last 18 months, since 232, it's become a U.S. focused uranium mining store in the global landscape. Why? The U.S. is insignificant in the terms of the global landscape. So you have to ask yourself, how does this cycle play out? Who are the buyers of these assets? Well, I could think of the Russians. I could think of the Chinese. Why? Because they're both building like crazy. The Russians are building reactors around the world. The Chinese are not only building them like gangbusters internally, but they have plans to build along the Belt and Road Initiative for others. Who else is dependent now? Who's growing nuclear power? India. Who else is growing it? The Middle East. Well, what do all of those have in common? Where can they probably not come in and buy a majority-owned stake of a company? Probably not the U.S., right? Can they buy minority stakes in Canadian companies? Yeah, we've seen that. But where do they get big pounds fast? Right? Africa is not a bad place, right? So, and have they been mining? Now, Have they been mining uranium there for decades? Yes. Right. So you have to look about what parts of Africa, what the project is. But so we don't take that broad brush approach. But the other thing we don't do is we don't bet the ranch on one or two stocks. Right. So and that's and so from you ask about investment hacks, right? We're going to if a little insight, right? Whether we're right or not, who knows? If we have a huge feeling about something and we're really comfortable with it, is it going to be a 15% position? Yeah.
Okay.
Could it be 20? Right now, if the cycle works and it grows, then it's portfolio management and how to manage that size position. But do we go out and put 50% in one position? Absolutely not. Now, from what I gather on Twitter, just from reading stuff, some people got really hurt in the U.S. in this past downturn. And I feel terrible for people if that happened to them, but they need to understand you have compassion for people, but you don't bet the ranch on something. There's different geographies, there's different stages, right? Because you have production, near-term production, exploration and development. Who's going to go? What's the market going to pay for? Are they going to pay for pounds that can be produced right away? And at what stage will the market pay for that?
Right.
That's an important thing, right? Well, people ask me all the time, how come you're a short seller? How come you don't short anything in uranium? Because sometimes in the cycle turns, the shittiest companies are going to rip your face off because people are going to dream a dream that they're not dreaming in a bear market. So I think people need to have a little bit of a diversification, and they have to understand at what stage and what type of company they want to own.
There's billions of dollars being spent building reactors all around the world by lots of countries. So those countries are buyer of nuclear as a solution, okay? It's a question of how much, not if. It's, how much uranium is going to be required, right? Is that fair to say?
Yeah. Well, yeah. And okay. If you want to think, let's cycles, peaks and troughs. In 2004-ish, when the cycle went from $10 to 137, by 2007, and I don't believe it gets back there. But again, that's human emotion that drove it there. But can it? People always ask me where it goes. I don't care where it goes. I know where it needs to go.
Sure.
Where it needs to go to incent production, right? Is 55, 60. The rest is gravy. And that's where everyone all of a sudden at 50 is sitting out. You're sitting at the pub having a pint, and everyone's saying, we've been doing work on nuclear power and uranium, right? And they've already had a 5x move or a 4x or 3x. But back then, there were 24 reactors under construction. At that time, 24. Today, there's 54. And you're breaking ground on new ones. Demand is accelerating very rapidly because of these new reactor construction starts. Since the last really forecasting period of let's say, the World Nuclear Association or others, you've seen the French come out and say, you know what? We're not taking those 14 reactors offline in 2025. It's a 2035 thing. India's accelerated. China's accelerated. The U.S. has had relief. But yet, the unfilled requirements that were concerning people back in 2003 are about here now. And inventory levels don't wash, meaning it's de minimis. That's the setup you have. And it's mad.
The supply side may not be able to catch up with the demand side. I mean, is that, again, fair to say?
That's our bet. By a meaningful amount. One of the things I hear often is, well, the Kazakhs can sell all they want at $35, at $30, at $25. So, right, because Kazakhs 41% of the Kazakhstan and Kazatomprom is half of that. But you have to put everything into a mathematical context, right? What is at the all-in sustaining cost of below $20, right? And people look only at the all-in sustaining cost. You have to understand how that sausage is made because other people report it all over the place. But then they forget that then you have to just say, okay, now let's go beyond the mine all-in sustaining cost. What is the G&A to support that mine at the corporate level? What is the interest expense to support that debt that they have? Are there any obligations that they need from a dividend perspective? And I'm not just talking about, I'm talking in general. How much of that project requires further exploration cost? And so what people do is they look at a cost and say, okay, that's the cost, throw a little bit of margin on there, and that's it. That's not how it works, right? There are other costs associated with it that increase that cost. But even if you assume that's how it worked, put it in buckets. What's below $20 per pound all-in sustaining cost? Last year was about 66 million pounds produced. They could produce probably about 85 million pounds. Now let's go in your 2030 bucket, right? Now you're getting into the 20-ish, 25 million pounds ballpark, right? So, but now that's not incentive price. That's all in sustaining cost. That doesn't include G&A, doesn't include an interest expense. It doesn't include all the other expenses associated with it.
Yeah.
Where can that get sold? It probably gets sold in the $28, $30 range. Okay, so now what? You have 110, 115, 120 million pounds. You've got demand of over 200 million pounds and growing every year.
If you don't mind, Mike, can we just spend a little bit of time just talking about the price, the inelastic nature of price in this commodity, because it's unlike any other that I've seen.
Utility buyers will pay what they need to pay when they need uranium. A fuel buyer will not get fired if he pays $10 or $50 or $80 or $100. He will get fired, or she, I don't mean to be gender specific, but he or she will get fired if they don't have fabricated fuel rods ready to go into those reactors. Now, the incentives of fuel buyers are not to be heroes. They are to pay what their peers are paying. And so a fuel buyer doesn't get fired because he paid $80. He does get fired if he doesn't have fuel. And so that's security of supply. There is no substitute, right? There's nothing to substitute that. And when you start to get into issues now where there's a demand picture and a supply picture, and supply has been cut dramatically, and the projects that are on care and maintenance require much higher pricing to come online. And even then it doesn't fill the gap. That means new projects need to come online. The other thing, people think 232 came on a whatever day it was, on a Monday, officially, I think. On Tuesday, we're going to see the spot price of uranium go parabolic. That's so nonsensical and so not how it works and so unrealistic. We're talking electric utilities where they've had 18 months of uncertainty. They now have to digest what it is. They now have to step back and say, okay, let's plan now what we know. And by the way, a contract negotiation takes months.
Absolutely.
They're going back and forth. So to the investor that freaked out because it didn't move right away, I'm sorry to say that's they've got to get more in the weeds then.
You could say the same with the working group. You know, people sitting back and expecting something miraculous for the uranium industry from the working group.
You shouldn't expect miracles when you're investing.
There you go.
That's I can't hold people's hands, right? Miracles don't, right? What are you hoping for? If you understand, like we believe, and again, we could be wrong, that's what makes markets.
Right.
But what we believe is when price discovery in mass occurs, and our signs are telling us Cameco's not signing contracts with a 3 handle, it's a 4 handle. Other discussions are taking place. Eventually, the long-term price on a reported basis will move up.
Right.
Then from that point, you're fine. If you anticipated that 232 is going to come and something's going to happen like that overnight, it doesn't work that way. I see a lot of commentary on Twitter and a lot of people very passionate, and they some really educated ones. And but when I don't know, I speak to a couple of them offline, but you get the sense that it's bet the ranch mentality on things, and this is happens overnight and to the moon, and these are long cycles. You have ups and downs, right? And people get impatient, and like you said, it's personal, it's their money, but spread it out a little. Yeah. And we don't spread it out too much, but 1 or 2 companies, I always say this, I half joke, even if you love the greatest in the world, and I thought it had 10-bag potential, is it going to be half my fund? No. Why? Because I don't know if the CEO is sleeping with the secretary, and you're going to wake up one day and the stock's down 50%, and shit like that happens.